Go live button. Good morning and welcome to another episode of the Financial Pro podcast. We are live in a few places this morning, and we've got an interview with one of our mortgage pros, Stephen Morris, and we connected really because he comments quite a lot in the mortgage pro community around key areas of particularly helping new advisors and sharing ideas. And when we had a conversation, Stephen actually was a manager at Which, involved with recruiting, training, coaching, mentoring, helping trainee advisors through to, being competent advisors. And over the last 11 months, almost 12 months, has been running his own brokerage. So today is going to focus heavily around all of you new advisors out there in terms of getting some idea of what the reality of being a trainee going through to competent is actually really like. So morning, Stephen.
Morning. It's hell, just as a heads up for everyone. No, it's all right. As long as you follow and defer to the knowledge of someone who's been doing it for a number of years, you should be all right. Yeah, it's not too bad. It's all right.
Yeah, exactly. The uphill curve's a steep one, isn't it?
Yeah, I think the first couple of months in particular is it's kind of a weird sort of curve. We did it over a 6-month period. And I think the first month, everyone's like a rabbit in the headlights. And then in the last couple of months, it's really tough because, well, you kind of go from a pipeline to nothing up to trying to perform at what we would call an operational level. And that kind of trade up from you're just trying to build something. So, okay, I'm actually having to deliver an output. That's that requires a fair amount of grit. So so it can be a secret.
For those who have not seen you in the mortgage pro community and obviously listening to this on the podcast who may not heard of you, and obviously we'll get to more around your background as well. I suppose let's start there. Where what brought you into financial services, and bring us a little bit up to date so people can get some context as your expertise and experience.
What brought me into financial services? Needing to pay my rent. That's what brought me into financial services. So I'd finished uni in 2008. Yeah, and it was financial crash. Job market was awful. I was living with my now wife Karen in a flat and needed to pay rent. So I went and got a job in a call center with RBS. My job was to get shouted at, basically, which was a lot of fun. So it's basically people claiming on their home insurance. It's like, oh, my house is burned down, and you've got to go through the policy and decide whether or not they aren't covered, which obviously was a lot of fun if they weren't. So didn't enjoy that particularly. So saw a job in the local paper. Sounds like I was born like 1900s, doesn't it?
What on earth is a paper?
Yeah. So I saw a job advert somewhere for a mortgage broker nearby as like a trainee, a large-ish, shall we say, fee-free brokerage that a lot of people are probably familiar with, relatively household name. And went and did that for a few years. Training was okay. I mean, like, in terms of the basic nuts and bolts, in terms of the very basic tick boxes you need to satisfy to arrange a mortgage for someone, it was, I guess, kind of a good grounding. And because you're doing things at very high volume, you've got efficient, it finding wins basically, and helping people quite quickly. But yeah, I think it's just before my first son Harry was due to be born, I wasn't even looking for a job actually. My Hotmail is like black hole of Calcutta, it's just full of crap. There's like probably 50,000 emails in there, and just by chance I logged in to check an email for something else, and I had this like email in my inbox about a job at Which mortgage advisors. So I was like, okay, well, I'll go along. I wasn't in a massively brilliant place with the current role that I was in, so went to the job. The people there were lovely, they seemed to like me. So then I moved across to Which and just went through a gradual progression over 8 years to kind of get to where I was. So working as an advisor, and then you get the normal promotions like senior advisor, and then I ended up being able to kind of go across into what was their onboarding team at the time, where my primary and sole role was to try and help people get better at being a mortgage advisor as quickly as possible, because at that point they had very big expansion plans. So in most instances, we're trying to get people from having literally no experience. And we found they're actually our best people to take on and train. So they're a blank canvas, and get them to writing between 8 and 10 mortgages a month in a 6-month period. So it's extremely challenging. I don't know if any of, I think if you think back, anyone sat watching this as a broker, think about what you were like at your job when you were 6 months in, getting from 0 to consistently writing 8 to 10 mortgages a month. That's a very challenging task.
Yeah.
And yeah, that's what we were tasked with doing. It was a very stressful job, without doubt, for me and my colleagues, because that's a big ask. But yeah, we took the challenge on, and we trained some people that went on to be really, really good. Some of them are now working for us. We specifically, when some people came available to work with us, we specifically sought them out because we knew how they've been trained and how they work, and they're doing brilliantly.
Yeah, it's a massive uphill curve. We were talking just before we kind of started here. When I got back to mortgages in 2016, the first broker I took on was a trainee. And you kind of underestimate, and even my insurance brokerage that I built for 7 years, all of those had no experience in financial services at all. And I trained them right the way through. And like you say, it's a massive uphill learning curve, isn't it? And what do you think when someone new is coming into the industry, what do you think their perception is versus the reality of actually that first 6 months?
Right. Okay. I can answer that one really easily, actually. Okay. So the perception of someone coming into, particularly if you work as a whole of market mortgage broker, the perception is that you've got a queue of customers that want a product from you, like you work in a bank. And it's not like that at all. It's to some extent, and I don't mean to scare anyone off unduly, but it's reasonable to set fair expectations. It's more of a battleground where the most competent, helpful, and insightful advisor wins, right? Yeah. And people don't see it that way when they first start out. They think you're an advisor with CMAP. Someone comes to you with a problem, you provide them a solution, they take it up. But it doesn't work like that. If it did, then all advisors will convert 100% of their clients. They don't, and it's to some extent it's a numbers game. You need to be dealing with a big enough pool of clients to yield results. But equally, you need to be spending enough time on each client and providing enough value that they actually want to go ahead with you. And that's the bit I think people don't really realize when they first start out, because the playing field has been leveled for quite some time by the internet, that there's such freedom of information. People think they can go along online and shop around for a mortgage in a way that they wouldn't with things like a pension or an investment. And you seem, by virtue of how the internet's been set up for mortgages, you seem more disposable. And that's the bit I think most new advisors don't really appreciate until they start.
Yeah, the lead generation side has definitely been made easier through social media, but I see it more often than not with a lot of my mentees. And it's that thing of they go self-employed, they go absolutely gung-ho on lead generation and putting content out there and educating people and everything else. Then they start to get some inquiries, and then actually they get really busy. Plus they're sort of learning all the elements of being a business owner. Perhaps they've been employed before or something on those lines. And there is that element and school of thought that you learn to be a mortgage broker. And like you said, it takes 6 months, maybe 12 months to be really, really good. But actually, how much time do you invest into learning to be a business owner? And when you learn to be a business owner, you've got lead generation, you've got marketing, you've got systems, you've got people, you've got finances, you've got cash flow, and all these kind of other things that get factored in on a self-employed basis. But for someone who's never been in the industry before and became an employee of which, for example, or like I get messages from people all the time saying, oh, I've just got my CMAP and I'm really finding it really hard to get a trainee advisor job. And, I want to go directly authorized. I'm like, what the hell are you talking about? You've not even sold a mortgage yet. And you're thinking about authorization. What do you think that uphill curve is like?
Just to go from 0 to business owner.
Yeah. Or even 0 to competent advisor.
0 to competent advisor, I'd say, is like the walk-worn Ninja Warrior. Zero to owning your own business. Well, basically, you need to be Spider-Man scaling a building, don't you? Really, let's be honest. To me, that just doesn't stand to reason, unless you're someone who happens to have a captive audience of customers. Like, let's say you'd recently moved to the UK and you've got a network of people that all let's say speak a different language. I don't know. So let's say you're, I don't know, British born Chinese, and you've got a group of family members and friends where there's like a common language where they would need to speak with you specifically, or do you see what I mean? Then you might be able to get away with it. But I think going from nothing to business owner, I can't see how you would go about doing that, because like you said, you've got too many plates to spin without enough experience. You've got to try and do the lead gen, and then when you get those leads, you have to try and deliver on service and outwitting your competition, and you're behind the curve on that basis. You're giving yourself you've got an unfair disadvantage, basically.
Yeah, and it's when I get those kind of messages, I talk about joining Woolwich, much like you. I just wanted a job and save some money, and banks were always going to be around. But Woolwich, I got qualified there. Then I went on to Connell's estate agency. So I went bank, estate agency, brokerage that required me to drive to people's houses, London to Alexander Hall, where it's a different environment up there. It really is cutthroat. Then I moved to a new business in 2006 or 2005, built a business for somebody else before I then felt confident enough to kind of go self-employed. There was just that whole variety of backing. And my dad's been self-employed for as long as I can remember. I'm fortunate in that sense. So I even had a mentor from day one of my self-employed environment. But just that element of having no experience at the Woolwich to then going through estate agency, brokerage, in-house, in office, over the phone, I think that was enough to kind of kickstart every eventuality that I could possibly come up against, pre-credit crunch, of course. What was kind of your foundation before you moved to going self-employed 12 months ago?
Going self-employed and making our own business with its own kind of, I hate using the word, but mission, mission statement. It's a bit cheesy, but that's kind of, I guess, what it is.
Yeah.
I've wanted to do for years, and between me and my co-directors, Dan and Tom, I'm pointing here like they're sat here. They're not. Empty chair, honest. I swear. we're not flagging the rules. Yeah, we've always wanted to do it, but I'm quite a risk-averse person, and we were pushed rather than we jumped, because we were made redundant last year. And the upshot, and this is genuine, and this is I guess kind of leads into a training piece. This is how we describe our business to our clients. So rather than talk through an IDD, so with authorized and regulated by the FCA, yada yada yada, I literally just talk through the journey we've been on. And this chimes in something I've heard you talk about, which I agree with, is that a lot of people say you need to sell. What's the phrase? Sell, don't tell. But actually, for me, it's the other way around. It's tell, don't sell. If you sell, you're just talking about a random bunch of benefits that you think suits a generic client. Whereas if you tell a story, for some reason, humans are wired up to chime into stories and perceive them as genuine. So we will normally tell a story about how we came to be. So we were working at Which, got made redundant. That left a gap in the market for, consumer focused work in the mortgage space. And that's really what we're trying to carry on with our service. So yeah, just to kind of, I've gone on a tangent there. I always do this. Just to get back to the point. Yeah, we didn't really make the move. We were pushed. So we were made redundant. And I think Dan, Tom went to work for a competitor for a while. Dan went for some interviews, and we just didn't really like the competition, if we're honest. I think Tom got on well for a few months, but me and Dan didn't really get on with the interviews that we attended. So we were like, right, well, it's now or never. We've been talking about this, so it's time to put our money where our mouth is. Well, our redundancy packages where our mouth was, and just go for it. And it's been absolutely brilliant. It's the best thing I've ever done by a mile. I've had the weirdest, most roller coaster 12 months in my life ever. And yeah, we're just personally and work wise, I'm just in the best place I've ever been in. I absolutely love it. Absolutely.
Like, in terms of being a mortgage broker, you actually had was it 2019 you went self-employed? So you nigh on had 15 years employed?
2008, so 11.
11
yeah.
But
11 years.
you have 11 years experience as an employed advisor, as a manager and a trainer to other advisors before making that jump. Now, it's not saying that everybody needs to go through that length of time. Obviously, you had a good employed job that you were in. You know, looking back, do you actually think you should have gone you would have gone self-employed sooner, knowing what the grass is actually like now?
No, I don't think I would. I think everything that we've gone through and all the experiences we've had have put us in so much a better position. So that, and what I mean by that is we never had plans to immediately scale, but we've gone from 3 to a team of 9 in COVID since January, which I never would have dreamt that would happen. But I'm very glad and appreciative that we went through the processes we did at our previous employers and at Which, because at the point now where we need to scale a business, I know between me, Dan and Tom, we essentially, with the exception of our manager above us, we ran that onboarding team. Yeah. We know how to scour CVs. We know how to interview people. We know once we get them in, how to actually train them, how to manage them, how to make sure that any probationary period comes to the right result with everyone on the same side, without because probation periods, when it comes to management, that can go down a bad path if it's not managed correctly. So not that we've got plans to immediate scale, but at the point where we need to, I've got so much more, or we've got collectively so much more in our toolbox than your average mortgage broker, that I'm really, really grateful. So I don't think I would have actually changed it, but that's just specific to me and my plans and what might happen in the future.
Yeah, no, I think everything happens for a reason, and I think you are where you are meant to be right now, based on the past and experience that you've had. And if you'd have launched maybe sooner and left Which and got to, rather than being forced out, you don't know what cards you would have been dealt at that point in time. I talk about burn your boats is one thing that kind of gets said, and your boats were definitely burned. You had no way back when you were made redundant. It was kind of do or die kind of thing, and that's probably added to the energy and the success that you've had, rather than going into something half-hearted. But you mentioned there as well about the scouring CVs, looking at the initial kind of onboarding process is absolutely vital. Like, I'm quite happy to admit, I did a podcast on this previously about the mistake that we made at the beginning of COVID. Like, we've scaled from 4 to 13, I think, during this environment as well, in terms of my brokerage. And the mistake that I made was I took on 5 advisors in February, and it was then all on me to manage them and onboard them and check that they were doing the job proficiently, that they were using the CRM effectively, and that they had fallen into our processes efficiently. Which by the 17th of March, that's how badly it was. That was how much it was stressing me out. I remember the day. Now, 17th of March, I said to Andrew, who's now my operations manager, mate, you used to be a branch manager at Halifax for 12 years. And we'd spoken about it a little bit, and he wants to manage, people and a team and a business, probably the same way you did at Which. I've always been a good salesman. I've never been a particularly good manager from that point of view, because they're different skill sets. That being said, I still manage a lot. But the thing that we did was, when that kind of happened, everyone got massively busy between May, June and July. Andrew then got pulled back into advising. I got pulled back into advising. The 5 new advisors kind of got left a little bit to their own devices and weren't given the love and the attention. And the system was wrong. We lost leads. They were selling fees incorrectly just because of the way that we work. And on reflection, when things calmed down, perhaps in July, we changed the system, we changed the processes, we made improvements. And since then, I mentioned to you before this, our August, September and October, we're like 40, 50 grand up on the previous 3 months when those guys kind of came in initially. How important do you think it is when those advisors that you've had starting your business, what's your initial onboarding process like? Because I know what I'm going to do differently when we've taken on our other 3 or 4 since then. But what's kind of your initial onboarding process?
So I think you're going to have to change it depending on what kind of business you want to run. So, or what business you have and what clients you have. So if you've got more of like a fee-free model, then to me, it's more about the efficiency of this isn't 100% true, but there's more efficiency around things like admin. Whereas I think if you've got a fee charging model, the focus is more around the way you engage clients on the phone, and the structure of the calls. Because if you're not charging a fee to, and I'm probably going to get lambasted for this, you can focus more on the product than the lender.
Yeah.
Because if you can provide the cheapest product, why would the client not take it? Whereas when you're charging a fee, there has to be another reason. Otherwise, why is the client going to use you against a fee-free broker? So before you get started on the phone, you have to have some kind of like a magic kingdom of what you can do versus what a client can't do on their own, even to a novice advisor, and that they can explain that in a way that's intuitive and slick and well presented before they start playing with clients. Because otherwise what you do is you take a habit which isn't adaptive, and then you scale it up and you reinforce it through repetition, and that's not good. So the way I've always tried to train my advisors is, well, we start with factual stuff first. So particularly if they're coming in as a novice, they need to have a grounding in lots of different types of business. So, and again, this is different for everyone because you're going to have different types of business. When I compare that to when I first started in my very first job, which was fee-free, there was no training around the different types of business. So whether or not it was buy to let or limited company buy to let, which didn't really exist back then anyway, or it's to do with right to buy or shared ownership, there was none of that. It was basically, this is how the CRM works. This is how you talk a client through a fact find. Here's a headset, which you can kind of get away with if you cut your teeth on the job. But if you're charging a fee, you're generally picking up slightly quirkier business, and I don't think you're as able to weather that storm, because you'll have more clients kick back against the advisor and say, look, I'm not prepared to pay a fee, and that's going to crush their confidence. And it really is about confidence. So you have to take things in small steps and integrate more and more, and kind of almost stitch the process together in mini steps in like what's the word I'm looking for? So in like a hypothetical training environment where I'm the client, we're doing it over the phone, and you just do that over and over until such point that they're confident to actually take their first call. And that to me was always really, really key, that you've got to get the advisor to a point where they can hold their own against me as a pretend client before they actually go out to a real client. And we would purposely do that. So we would get to a point where the hypothetical scenarios would become trickier and trickier, and the client would become more and more of a dick, basically. So classic thing is we would get someone into a position where it's all nicey nice, and I'm a very a client is happy to acquiesce. But then I'd start throwing in things like when they start going through their IDD, I'm like, so I've been online and I've seen like 3 brokers that don't charge a fee. Why would I pay your fee? You need to have a response to that. Yeah, you can't just learn that on the phone, because it's going to crush their confidence. So all the little problems and pitfalls that can crop up during the advice process, we would try and practice those before they go live with a client. But yeah, I think if we just go back to the beginning, it's give them a grounding in the different types of business that they're likely to come across initially, dependent on your business, and give them sort of tidbits of sort of wisdom that they can use. Because if, again, you think of it from a competitive point of view, always assume every client that comes in is speaking to another broker. If they speak to a brand newbie who knows how to go through a fact find and click some buttons, all that's going to happen is they'll get to an end of a 30-minute fact find, and the client will feel, well, someone asked me a load of questions and said they'd come back with an answer. And it doesn't feel hugely confidence instilling. But if you've got that newbie to a point where, okay, well, you're getting a right to buy case, these are the extra 3 things that you need to figure out, or you need to talk about. Is there anyone else named on the right to buy papers? If mum and dad's on there, we can go with Barclays and Skipton, they'll ignore the highest age. So it's a little bit, do you see what I mean? Little insights like that can make someone who is new look much more experienced than they are. And we would have a Google Words document with all these different situations in, where if they're live on the phone, they could literally Control F, search right to buy, and there's a few extra questions they can ask to make it sound like they've got more prior experience. So that makes a big difference. And then I think from there, it's about how you control calls and how you respond to a client when you don't know the answer. That was the real big one, because that's the classic concern from any new advisor is, I'm going to get on the phone, the client's going to have a problem, and I'm not going to know what the hell I'm talking about. How do I respond? And that was the number one thing we trained over and over. And that was basically just what we called our limited marketplace spiel. Have you heard of that?
No, but I imagine it's probably the same sort of thing that I use, in the sense of, oh, that's a tricky one. Things are changing all the time.
It's kind of like that. Yeah, it's basically just, you're kind of just talking about supply and demand. So you're just saying, okay, well, I'm sure you appreciate, Mr. Client, if you're looking to do a limited company buy to let, not every lender on the market does that. And as a result, what we might find is there's a selection of lenders who are going to be better set up for what we need. And as I'm sure you appreciate, through supply and demand, it means that the cost of that mortgage borrower might be slightly higher, but that's something we're set up and we help clients with all the time. So all of a sudden, I've taken something that sounded like, I don't know what the hell I'm talking about. That sounds like a plausible response. And you can fit that to any situation. And then as someone gets more experience, they can actually start putting specifics of that problem into context and fluff it out and then give a bit more context. So I can't think of an example right now, it's terrible, but you see what I mean. But it's those little things that get someone, they're crutches for their confidence. And the more crutches you can give for someone's confidence, the more they can feel as they can face more complex inquiries and actually take control of them. So it's just giving people those little tools to get from the beginning of the call to the end of the call without feeling like they failed, basically.
Yeah, and that's the difficult thing, I think, for so many newbies. It is really difficult to maintain that confidence level when you've got so many different elements to try and remember. Like the advisors that I took on earlier this year all had experience. So the issues for our side of things were all around the system. It wasn't around the advice that they were giving, and it wasn't around, necessarily the knowledge on the first phone call. So there wasn't that kind of confidence barrier to get over, because Simon's 20 years experience, John was 3 years experience, and he's actually our A-star student at the moment. He's killed it. He's already done 100 grand, and he's only been with us sort of since February time. April time. March he officially started writing. But I think when I took on a trainee back in October 2018, the big thing that I really focused on was that element of process. Because I think there's the important thing for new advisors to get their head around is, if you can get the process down and understand the kind of the beginning to the end, then like you say, you can add in almost the little bits to the tool belt. But actually, yes, the first conversation is the hardest point. And the way in which I dealt with that was I would do all the initial conversations and sort of let them listen for a period of time, because there's that whole training method of, show, teach, repetition, let them then do, and you observe. And I would do all the initial calls, and I'd be like, yeah, no problem at all. I'm going to pass it to Elliot now. He's going to give you a call in a couple of days' time, which, chase all the documents in, get him to pre-fill the fact find, and actually just get used to the process before putting that pressure of that first conversation on him, which leveraged me up, because we know that this job is 80% admin anyway. And most of that work can then be trained behind the scenes without the client ever having to face the issue. And for 3 months, all he did was service existing clients and support me and do remortgages. And then we started to give him newer stuff after, the trickier stuff after 3 months, because then he had the confidence around the process. He'd been used to using the phone, he'd faced a couple of objections, but the research was all being done. Now, do you think that method works quite well from what you've seen? Have you ever adopted that kind of method in your business?
I have seen that done before, and that's my preferred way of doing it, in that you introduce someone into the advice process backwards. Yeah. So they deal to begin with right at the further end. So case managing, dealing with lenders, getting them to basically, do what they should be doing. And then you introduce them into it, as like I said, further and further backwards towards the beginning. So it could be, okay, well, you've been doing chasing lenders, now you're doing packaging, now you're doing keying apps, now you're doing research. And it just means by the time they get to the first call, they're able to start with the end in mind. So I've always found that people who started life as case managers, if they can kind of move effectively into being an advisor, they often end up being the best advisors, because they've got a very nuanced understanding of different lenders' underwriting procedures. And that's ultimately what clients pay for, is they pay for advice. Yeah. And if you can have an advisor who early on in the career go, right, we've got 2 lenders on the table, we've got Barclays and Halifax, it's £2 a month between them. Let me tell you why we go with Halifax. That advisor is set up to win all the time, because if they're competing against another advisor who's just going, well, Barclays is the cheapest, you've got more insight and more nuance to your advice, and that's what clients pay for. They don't pay for the cheapest products, they can get that themselves.
Yeah, no, I'm totally with you on that. I've said for a long time, some of the best advisors that I've ever known and worked with have been administrators first, then, you know, kind of been paraplanners, as you might want to call it, where they're supporting alongside a really good broker. And then they've kind of delved into the next part thereafter, of the, not the advice part, but more the initial 10% that's actually the only bit you realistically end up selling on a mortgage sale. Because if you get over through that 10%, once that bit's done, you're thereafter, you're just really an order taker, aren't you?
Yeah, absolutely. And that was always the number one thing we focused on, was that initial call, and that you can have the most blinding recommendation call in the world, but if you've got a terrible initial call, no one gets through to recommendation, right? Yeah. So of all the calls, you need to get your initial call down pat, slick, and very sort of progressive. So yeah, the initial call was always the first one that once we'd given them like a grounding in how mortgages work in general, the different kinds of business they're likely to come across, and the additional considerations to have with clients to sound like they've done it a million times before. The first thing we would always focus on was the initial call. And this isn't joking. When I had enough time to do it how I wanted to do it, I would probably do 40 initial calls with some of my trainees before I put them live. So I'd go out with a mobile into a separate office, phone them, and just do it over and over and over. And I'm quite sort of, I'm almost too methodical in how I do things like this, but I'd break the initial call up into 4 parts, and I'd train each one individually. Yeah. So before you even did a full initial call, but right, I'm going to do the initial chat at the beginning. Let's do that over and over and over. Because I personally, I've listened to so many advisors' calls at different businesses. With the way the recording systems work, I could just pick someone random who I hadn't trained. I could listen to their call, and honestly, the first 5 minutes of initial call is where experienced advisors actually start to go backwards, because they forget the key principles of what you need in that first 5 minutes, and they just get into a routine. And yeah, that I would train that with people over and over, because if you get the first 5 minutes of a call right, you can skip a load of the nonsense in the middle. Yeah. So I'll give you a great example. I once listened to a call of an advisor. It wasn't someone I was managing, but when they answered the phone, they thought it was a new lead coming into the business. So they just went straight into a fact find. Okay, so what mortgage are you looking for? How much are you looking to borrow? What's the purchase price? All me stuff that basically that's the advisor vetting someone, which is horrible. Clients don't like it. They can smell it a mile off, and it puts people off. What the advisor didn't realize was that client was trying to get through to existing advisor, and he thought he was going through data protection. So we spent 10 minutes doing a fact find for a client who didn't need a fact find. No. Whereas if he just said, hiya, so-and-so from whatever company I was at the time, how can I help? What can I help you with today? I'm just trying to get through to my existing advisor. Do you see what I mean? So that's a bit of a facetious example, but you need to, that first 5 minutes just needs to basically be a nice open chat where you learn to understand what the client's goals and challenges are, not what they're asking for. And to me, that is massively key, because again, I'll give you another example. Client last week phoned into us and said, I need a REO mortgage, retirement interest only. My first question was, okay, that's great, we do those. What are you looking to try and get out of it? Which is different from, let's go into a fact find. And the reason that's key is by the time I said, what you're looking to get out from it, his response was, oh, well, our term's coming to an end and I just need to extend the mortgage term for another 10 years. You don't need a REO, mate, you need an interest only. Do you see what I mean?
Yeah,
There's a really, really big difference between taking a client's request and putting that through a process and learning to go, hang on, what is it you're actually trying to get? Because with that question, you can be way more certain that you're getting the optimum solution for the client. Because what's the likelihood that a layman is going to call in with the right prepackaged solution for themselves? If they did, they wouldn't need your advice. So that 5 minutes, that to me is the difference between an okay and a great advisor. And I always focus trying to get my advisors really good at that from day one, even though they wouldn't actually know where to, do you know what I mean? They wouldn't know where to steer that, but at least they could get off the phone and say, Steve, so this guy called in, he asked for a REO, I asked him why, and this is what he said. And I'd say, right, okay, you need to consider either long repayment mortgage, maybe even equity release, or another interest only mortgage as well as a REO. And to me, that's what advice should look like.
100%. It's that whole first minutes for me is all about rapport building as well. It's just that whole thing, who are you? What are you about? How can I help you is my first question. How can I help? What do you need? What do you want? And then also just finding out that element of it before you even give any kind of advice. It's just having a chat with somebody. That's the main thing. And I was just referenced, think you're talking to one of your mates, not necessarily a client, where there's any risk or anything else like that, because it's a personal subject. And just having that personal service and that personal relationship makes a big difference to the rest of the sale thereafter as well, doesn't it, at the end of the day?
Yeah, absolutely. I think the best advice I was ever given as an advisor was just to basically switch the guidance system off. Like I had my manager at the time just basically shut the lid on my laptop or switch the screen off, whatever. And he's like, right, next client that calls in, here's a pen and paper, do it off the top of your head.
Yeah.
And the reason that worked is it meant that it's not scripted, and it means the most pertinent topic for you to tackle is different for every client. So if you put every client through the same process, you're not prioritizing what goals and challenges are key for them, if that makes sense. Yeah. So do you see what I mean? So that's something else we also tried to really work on, is just to try and get the advisors to look at what they're doing critically as a dispassionate observer, to say, okay, why am I doing what am I doing? Because again, I've had a few guys off Mortgage Pros contact me, say, look, how can I slick my process up? And I was like, well, it depends what kind of process you've got and what kind of clients you've got. But first thing you have to do is say, just look at it as an outside observer. Why am I doing the things that I'm doing? And the example we always give is address history. I was like, okay, during your fact find, you take your client's address history, all 3 years. Let's say they got 10 addresses. Why do you do that? It's on the fact find. Right. Why would a client want to spend 10 minutes giving you their last 10 addresses if they don't know you can help them? It's a waste of their time. It's a waste of yours. And that's what you have to try and instill in people, is also they need to understand what a general process looks like, but they need to be empowered to have the rights to tweak it where they see fit, I think personally, because that is how they're going to mold it to a client's needs, if that makes sense. I think the address history is a great one, because ultimately there is no reason why you need that on fact find. You just don't need it. All we need to ask is, have you lived outside the UK in the last 3 years? Done. I'll get your address history and we'll go ahead with the app. It's just a waste of the time. I'm overly efficient with that stuff as an advisor myself. If I can't explain to that client why it's a benefit, why my activity is benefiting them, I just won't do it. Much to the dismay of all the people that have done my compliance.
Yeah,
I just won't do it, because I don't see the point. And you have to have that level of, particularly if you're going to be training people, before you do that, you need to look at your own process, because of all the people that are most likely to get tripped up by a process and a client to not have patience with it is a new advisor. So if you've got a process which is very, very admin heavy and is around asking dry questions that a client doesn't see the benefit of, a brand new advisor is going to mess that up more than anyone else, because the client's going to have the least patience. So you really need to trim that process down to be as client focused and goal focused as you possibly can before you try and put someone into that, if that makes sense.
Without a shadow of a doubt, that's the one thing I am so process orientated, but not from the point of view of, like, I always reference, if you gave me the ingredients if you put me on the bake off, I would tank. But if you give me the ingredients and you give me the recipe and you give me the order, I will bake a pretty damn good cake. And that's like, as a mortgage broker and having done this job since 2003, it's like my brain is wired to save seconds, not minutes. It focuses on all those little things, like you say, that being the beauty of being directly authorized since 2008 is the first thing that I did with the fact find, was strip out all of that stuff that isn't relative to building a better relationship with the client, giving them better advice, selling them protection, focusing on them. And actually, like you say, the address history is a perfect example. Just get rid of that stuff. You don't need that in there at that point in time. It's not helping you to build a better relationship or have better conversations with clients. And I think for a lot of networks, they've got so many advisors. They've got so much. The processes are so embedded. Even ones that have recently bought out new CRM systems. but they don't go back and actually just review that fundamental document of a fact find and streamline it to make it easier. You only have to look at, some of the, dare I say it, and I'm probably swearing in say it, robo advisors that have their systems and processes all online and there is no advice, but their processes and their systems are streamlined as much as possible to make it easy for the client to DIY online. And yet so many aren't bringing that into their own day-to-day business, even as experienced advisors.
Yeah, and I think that's something which we try to get across to our clients, and seems to be received really well, in that we do try to use a lot of new technology. So we client portal, uploading docs, tracking cases online, all that kind of stuff. But we try to marry it with good advice. And I think that's where the robo companies are missing a trick at the moment. I'm not saying they don't give good advice, but what I'm saying is, because it's so focused on the product and getting the client to the point of A to B of what was the thing you asked for and us providing it, because that's the sole goal, you miss the opportunity to come up with other advice options. And that's what people really buy, is that human element of, have you considered you could do this instead? Right? Because they know it's fee free and it's high volume. All they've really got to do is satisfy the request quickly. And that's what the processes are set up to do. Whereas we try to get the client on the right path first and then make it efficient. And that's different.
Yeah, I'm with you on that completely, without a shadow of a doubt. So for anyone who's a trainee advisor at the beginning of their journey, maybe they've just got CMAP and they're looking for their first role, or maybe they've decided on which company they're going to work for, putting yourself in their shoes, what's the most important things that you think they should consider, they should think about, how they should behave, what they should be open to, what they should be aware of?
I would say the best piece of advice I can give anyone as someone who is becoming a trainee is, as best as you ever possibly can, just try and leave your ego at the door, because it's not an intuitive job. And I've had lots of people come up with strategies on how they're going to improve what they do, and in isolation and in principle it makes absolute sound sense, but when you see it play out on a scaled and repeated basis, it doesn't work. So the example we spoke about earlier was, we had a couple of advisors where they would block out their diary for follow-ups with clients, which in theory sounds brilliant, because you're then always committing to get back to clients quickly, you're freeing up diary time to do it. And we all know the quicker you provide a solution to a problem, you get an exponential return on how much you convert those clients. However, what happens is you end up with a diary that's blocked out for days at a time. So when a client calls in and says, I've got an offer accepted, I need to go now. Yeah, I can't speak to you till next Tuesday. That doesn't work. So what you need to do is you need to leave your ego at the door and know that, and put your faith in the person that you put your faith in to train you, basically. And when they have an observation, assuming it's delivered tactfully, politely, and with good intentions, and they're clearly trying to help you, just defer to that and trust the process. Just trust the process, because there's nothing more frustrating for a trainer than recruiting someone that you knew could be good at the job and having a good, consistent, open and honest feedback process with the client, with the advisor, but because their ego won't allow them to leave old habits at the door, that they then don't succeed. That is one of the most disappointing things, and that does happen.
Yeah, without a doubt. I think the thing that you referenced there, which is vital, is the element of actually making sure that if you've got no experience, you've got CMAP, realize that CMAP teaches you nothing about doing the actual job on a day-to-day basis.
Yeah.
When you understand that, you almost, to a degree, in relation to actually doing the job of a mortgage advisor, you can pretty much forget CMAP in today's day and age. It's the same exam that I did in 2003, for Christ's sake.
Yeah.
But as you said, be open to being coached and mentored. But that's probably the biggest thing that you need to do as a trainee, is find a company that is going to support you with day-to-day mentoring and training. When I trained Elliot for 12 months, he was sat next to me. He heard every conversation. He listened into my calls. He did my paperwork. We checked every single element, fact find completion, research being done, quote being produced with the fee on it, suitability or DIP being submitted, AIP being submitted, suitability letter being written. And don't underestimate that fear of, don't underestimate the time that it's going to take for you to actually become competent. Because as we said before this, you've got buy to let, you've got first time buyer, you've got remortgage, you've got commissions, you've got overtime, you've got bonuses, you've got extra, you've just got 25 different nuances, and every single client is never the same. There's a completely different piece of the puzzle that could take something that was 95% the same and make it completely different because of one piece of criteria.
Yeah, agreed. Yeah, yeah, and I would say the best thing you can do as someone seeking a trainee role to maximize the chance that you're able to work in a very open-minded and progressive way is specifically seek out an employer that you see that in yourself, because we are wired up to only go along with people that lead by example, right? So if you want a lot of help, or if you particularly as an advisor's job is helping people, make sure you've got an employer where you're confident that they're there to help you. Because I think if you go into you just seek out, let's say, a big corporate, let's say, that you don't feel has your personal goals and interests at best heart, and it's all bit by numbers, and you're just another number on the system, I don't think you're as likely to take their feedback on board, because you don't feel as though your interests are being catered to. And that's something I've always been quite keen on, is that no matter what job you have and who your customer is, internally, externally, to get things to work as best possible, you need to give more and ask for more. So with clients, my mantra has always been, I will give you more time and more advice than your average broker, but then I'm going to ask for more in return. I'm going to ask for your documents straight away so I can do a proper job. And similarly, when I'm training advisors, if they wanted to, and this happened all the time because it was a stressful job, they would message me on the weekend, they'd call me on an evening. I would give them everything I possibly could to let them know that I had their interests at best, their interests at heart, because I knew that would then filter down into the way they deal with their clients. So do you see what I mean? Everything needs to be set up where you're trying to help each other. And if you don't feel that that's the case when you go for the interview, and you feel like it's more, I guess, commercial or just by the numbers, I don't think it's as likely you'll grow in the way you want to grow.
Yeah, I agree with you completely, definitely. And I'm not actually a massive fan of a lot of companies or networks that take on raw newbie self-employed advisors, because I think to get a real good footing in this job, you need to make sure that you've got constant mentorship on every day for at least 12 months.
100%.
And it's a sliding scale over 12 months, and a lot of that onus is on the self-employed, is on the advisor themselves, because you might get somebody who just flatlines for the whole period of time for the 12 months. They might take 2 years. So obviously, there's a lot of ownership on the actual advisor and their skill set, their speed of knowledge, their speed of learning. But I think it's making sure that you've got the support day in, day out, and a lot of the companies that take on self-employed advisors underneath their own brand or in a field-based role, you've just got to make sure that you have got that support day to day, because you'll just become frustrated and stressed if you don't have someone on you all the time. And more often than not, you'll probably throw in the towel and want to give it up.
Yeah, I totally agree. I mean, even if we look at our coverage ratio when I was at Which, ideally, there are times when I had 8 newbies in a team, and that whilst I was doing induction, that was just impossible. It was just way too much work to be done. But the ideal ratio was 4 advisors for a manager of a newbie team. Even that, I think, is too much, because and again, if there's anyone who's watching or is on the Mortgage Pros who was in one of my teams, which there probably would be, they will tell you that my day-to-day life was, I would try and do a task, so listen to someone's calls or mark a file, and I would get my sleeve tugged probably 10 times in an hour. Steve, how do I do this? Steve, our system's crashed. How do I set my emails up? And yeah, even you can't get your head around just how much work there is to train a new starter. So yeah, if you're going somewhere where there isn't a particularly big coverage ratio, you won't get good as quickly as you think you will. I would argue for really, really good, intense, dedicated training, I would probably want one manager to 2 people.
Yeah.
And I know that sounds overkill, but I could get them really good in 6 months. Whereas if it was really with 4, I think that you should have like a 12-month probation period, which we couldn't have when I was at Which. That just wasn't part of what they did. So yeah, you're right. There needs to be intense kind of feedback and coaching.
Yeah, with Elliot, again, it was that whole, he started in the October. He was doing product transfers, remortgages, and the odd new lead that I gave him. So there was mostly existing clients. And then there was the odd new lead that I gave him while he was listening to the strategy calls. From the beginning of 2019 to after 3 months, it was then a case of we started working on some of the newer stuff. And I was giving him I was actually doing his protection for all of that initial 3 months as well. Then we started to work on the protection recommendations during that next 3 months. And then by the time we got to April, he was kind of ready to do the whole process himself with a lot of support, but end to end on his own, with just me doing the odd little check here and there. And, oh, don't say that, say this. Oh, why did that one not convert particularly well? And it became more of a feedback thing, and the support dropped quite a lot. And I think that's vital. I actually think the best way to get competent in this job is to be in an office, sitting next to somebody, and just being part of it. Like you say, you sitting here, and then you've got 2 people sitting like exactly directly either side of you almost. And imagining it, you could have a 4th sitting opposite. So like you say, 2 or 3 works really well.
I have to say that was probably my most successful period of training, was in the last person I trained at Which was actually John Carpenter, who's in the Mortgage Pros group. And at that point, the business needed me to go back and actually start writing business. And that was actually a really efficient way of training, because I could basically answer the phone, have John on a splitter, and I could basically demo the process. Now, the way I do my advice is very sort of shaman goes into a wood, takes a substance, and then comes up with something new. So it's like I just kind of make it up as I go along for each client. But because of, I guess, the amount of training I'd done leading up to that point, I could easily demo it. It was not exactly how I would do it, but I could demo how I would want him to do it. And then we would basically switch. He would then take the next call, and then I would give him feedback. But the other part of it, which was really good, is that when I kind of went off into Steve territory, doing the sort of idiosyncratic stuff that I do, which is personal to me and how I work, I could say, John, don't do that. Okay. I've spent 10 minutes with the client, and I've asked them for their life in documents. You're a new advisor. Don't do that, mate. It won't work. And the reason's quite simple, that it's reciprocal. The whole point of our job is to try and reciprocate with the client. But because we're the service provider, we've got to provide the value first. Now, if you're a brand new advisor, you're not going to be able to give the same 10 minutes of value that I can give to then ask the client to send them their credit report, their bank statements, and the whole lot. And that's the thing that I'm really keen on, is that you have to have a training process which caters for people at each part of their journey. Because you don't train a brand new advisor how you would coach someone that's been doing it for 4 years. It's like learning to drive your first car in a Maserati, right? It's not going to work. No. So that yeah, exactly. So that's where I think that's a really useful way of doing it, because it means I can specifically point out to someone, these are the things you shouldn't do. This is me doing what I do to kind of cut corners or do something really efficiently, but you won't be able to do that until you know as much as I know.
Yeah. Yeah, and that's the thing, as you say, the grounding that I had in that same respect. I can smash out an initial phone conversation with a client within 5 minutes. In some instances, just because you can find the problems, you can find the solutions, you can build rapport, and you can get them off. But if you're new, the way I learned was back in 2003, 4, and 5. It was doing a full fact find.
Yeah.
skipping, the address history and the other little bits that you don't necessarily need at that point. Number of kids, but you get names and date of births a little bit later, kind of thing. And actually doing a full fact find is probably one of the best ways to really get your head around building it, but not wasting time on it. So
exactly right. I think to begin with, you need to know what the full path looks like before you know to take shortcuts. Because otherwise you don't know if what you're skipping out is not risky, that you cut in and out. So you do need to have gone through that full path. But I think it does bear fruit to start with the end in mind and say, look, be critical of your own process. When you're on the phone and you get that feeling inside you of, oh God, I'm just wasting this person's time asking for this, be mindful of that next time it happens and cut it out.
Yeah, completely agree. So we've spoken a lot about new advisors and all that sort of stuff. I want to end on, you started your business almost 12 months ago now, coming up to your 1 year anniversary. You've gone during COVID environment from, it was you and two others, wasn't it, up to nine people now. Is that all advisors?
No, so it's so we've got 6 advisors and 3 support staff.
Yeah, good ratio as well. That is, it's a good ratio to have, isn't it? From that perspective, if you've got solid admins looking after 2 advisors, it works quite well. So what's kind of your plans going forward then? Because that's fast growth in your first 12 months. I imagine that's come down to lead generation, right?
Yeah, it has, absolutely. Yeah, we've been very lucky that a few things have fallen into our lap with other third parties providing us clients. But equally, because we're very, I think between me, Dan, and Tom, we're all very similar people. We've got our differences, but our ultimate sort of ethos of just being progressive, trying anything that we think might work, and just working our absolute nuts off, we're all the same. And there was a period where I was doing a lot of reading and studying online about lead generation, and one of them was around how you could tweak your LinkedIn profile. So I went through a process of just every day going through, changing a few bits, changing how my title's set up. And off the back of that, a couple of people got in touch, say, oh, actually, I think we've got some clients that we could send to you, that we're doing it with another company, but we like the sound of what you do. And that's just taken off. And then we've got loads of different introducers, but because I'm quite present on Facebook through a few different channels. So we update our Advantage FS business profile at least a couple of times a week. I'm always answering questions online about mortgages, just because, well, I'm a bit of a geek and I like helping people, but that seems to generate leads. I mean, I looked at yesterday, I think I've had 10 or 11 self-generated leads so far this month. And that's literally, someone will just message me. They'll come into your, what's it called? Message requests on Facebook. Yeah. So just through Messenger. But yeah, mainly, I think it's mainly we've been lucky with some introducers. But that's because we've been making a concerted effort to try and grow our profile and generate that interest. I think the biggest mistake anyone makes when they go self-employed is they just assume that if you build it, they will come. That leads will just come through the door. They won't. You've got to go out and find them. You're going to have to hustle.
Without a doubt. Yeah, I always talk about my journey of using social media for the first time in 2016. And by around about May and April, before I started doing video, I was getting maybe 6 or 7 a month. Now I'm the largest lead source to active. I'm on LinkedIn, I'm on Facebook, I've got YouTube, I've done public speaking, I'm in property circles, all that kind of stuff. And that's where, when I realized at the beginning of this year in March time, it was like, how on earth do I continue to manage the lead generation, the strategy of the business, the direction of the business, and all of that when it was just me? You've started with 3 of you all on the same mindset effectively. And that's where now it really is, the change was, Andrew, man, I need your help. I need you to take the responsibility for this little bit so I can continue to do this little bit. And organically, with no marketing spend, we generate over 100 leads a month. And that's, as you say, just consistency for 4 or 5 years, focusing on that area and hustling, exactly as you said.
Yeah. There's no alternative.
It's the only thing that works.
And I think the main thing that we did is we tried to be really objective and just say, look, if I was someone outside giving us advice on what we should do, what what would our advice be? And the reason I try and look at it from that angle is, left to my own devices, I'm a very, very introverted person, like unbelievably. So we when we were at Which, we had the personality test, and my score on the sort of introverted scales is just it's the highest it can be. So left to my own devices, I will stay in my own little. I basically just play with spreadsheets all day, Gary. That's what I'm doing.
Mate, I love a spreadsheet. So I'm not gonna lie about that. Hence, I've had an office since 2009, and I am now the only person in my home office. Everybody else is completely remote. I'm very comfortable with a spreadsheet.
Yeah.
Company like you. There's an element of introverted there for me too. It's an act and it's a facade.
Yeah. And but yeah, we just said, look, these are things we need to do, and we started doing. I've done like video and stuff online, and yeah, the return you get on video is mental. If you look at the engagement that you get relative to just doing a post, and yeah, we've learned so much about social media this year, and yeah, in part thanks to you. I wouldn't have seen it through the same lens had I not have watched some of the stuff that you've done. And yeah, it's definitely true that you have to be consistent, and you have to trust the process, and you have to be patient. That those client inquiries didn't really start trickling in for about 6 months, but particularly in the last 2 months, every client that messaged me says something along the lines of, "I saw you comment on XYZ," or "I noticed that you're really helpful on this group. I want you to do my mortgage." And that's the difference. That it's not just an inquiry; it's your perfect kind of client, because they've gravitated to you, having watched you over a number of months.
Yeah.
And that's the difference. They're people that naturally trust you and want you to help them, basically.
Yeah, it makes the sale part so much easier and more fun, doesn't it? Because you technically don't have to sell to them.
Yeah, it's just helping people. It's great. I love it.
Yeah. So what's next then for you guys?
Okay. Well, the initial thing. Let me show you something. I have to unplug my laptop.
Now he's unplugged his laptop and his internet completely died.
I'm all right.
There we go. We're back.
So I've got my decks in the office for when I need some downtime. But yeah, at the moment we've got, this is the next thing. We've got this map of the world, and we've got a little advantage sticker for every country we've done a mortgage for. So the next plan is I want stickers on basically every continent. If you're not far off now. And then once we've got that, we need another two advisors at least, because me, Dan, and Tom are having to cover about 4 or 5 client appointments a day, and it's just killing us. We're at the point of what we call diminishing returns. So rather than, if you took 2 leads a day, let's say you do, I don't know, 10 applications a month, we're doing 4 leads a day, but only doing 15. Or did you see what I mean? So it'd be better off those leads going to someone else, because we can't dedicate the time we need to convert them in the same way. Once we've got that, I would rather we kind of stay stagnant for a bit and kind of recuperate. But ultimately, really, I think I want to be a network. That's what I want to do.
Yeah.
A network of franchises. So similar to like an MAB model, but with more of a specialist approach. So really around expats.
Yeah. Yeah, nice. And there isn't one like that out there at the end of the day, which is a good thing. And it's the same as us. We're building out. All my advisors are self-employed. They're all traders, active advisors, MAB model, same instinct, all around self-employed, limited company business owners. So it's a good model to have, I think, at the end of the day, that franchise element. And I've got one in Scotland. We're looking at Active Mortgage Scotland, Active Mortgage York, Bromley, Wales, Gloucester. So it's a great little model to have then with that side of things. So yeah, I think that'll work really well.
Cool. But yes, I've always liked it because it's quite a sort of it's a low risk, low cost model, and it attracts people who believe in themselves and back themselves.
Yeah. So you're going self-employed. Yeah. Self-employed networking 100%. Kind of model. Yeah.
100%. Yeah.
Yeah. Nice. Very, very good indeed. Well, thank you very much, friend, this morning. It's been good to chat through new advisor stuff. So I think it's helped a number of people. And we'll obviously go out on the Financial Pro podcast, and we'll continue to inspire the industry and give people the reality of what it's actually like getting trained and being an advisor in the job.
Yeah, hopefully it wasn't too harsh an outlook.
I think but you got to be real with what you like. It is a bloody hard job when you're first starting out. That's the bottom line of it. It is not easy to be a mortgage broker, learning all the nuances, all the processes, all the systems, the A to Z. It took me 4 years of a variety of different backgrounds to feel confident enough to go self-employed. That's the bottom line of it thereafter. So before we sign out, this is the Financial Pro podcast. I came up with the brand Pro because perseverance leads to results, which creates opportunity. What does Pro mean to you?
I did not know that's what it stood for, by the way, Gary.
We're starting to push that brand a little bit wider now. I haven't shouted it enough.
I didn't know it was an acronym. Okay, fair enough.
Yeah.
What does Pro mean to me? We discussed this quite a lot. That I've got maybe a bit of an alternative and jaded interpretation of professionalism. To me, professionalism is what you do and you deliver, not what suit you wear. And I think the whole industry of people in pinstripe suits arranging your house, your purchases and your mortgages is dead. Like it, literally, if I have my way, if we get nominated for an industry award, I'm going to the award ceremony wearing this and a t-shirt that looks like a tux. I'm not even joking. To me, that's what Pro is. Pro is the results you deliver and the quality of how you help people, basically.
Yeah, I love that. I love the whole do and deliver. I think that's such a vital thing. It's I'm not going to say anymore. I think that was a fantastic little answer to what Pro is. It's not one that we've had before on the other episodes as well. So appreciate you spending time with us this morning. Obviously, if people want to reach out to you, where would you prefer? Facebook, LinkedIn, Mortgage Pro Group? What works for you?
Facebook, probably. That's probably where I spend most of my time doing social media. Yeah, that's not a problem.
Yeah. Are you Steve Morris or are you Stephen Morris? What's the best to find you?
I think I'm Stephen. Yeah, Stephen Morris. Yeah, so yeah, I think I'm the only Stephen Morris in the Mortgage Pro community. So yeah, if you want to look me up through there, we're happy to help. There's been a few guys on Mortgage Pro who are newer and wanted some tips on how to kind of streamline and make their process slicker. And yeah, I was happy to have a sort of phone call with them. So if you want any tips or anything, just feel free to inbox me.
Yeah, perfect. So, and if this is your first time listening to the podcast, this goes live into the Financial Pro community. But for all you mortgage advisors, initially this whole brand kind of idea was an idea for me to connect with other mortgage pros effectively. So we've got the Mortgage Pro community, which is over 1,600 advisors now, sharing ideas, getting help placing cases. Steve's always prominent in there, along with lots of other people who just want to help inspire and motivate the industry to be better and save a lot of time. And we've got over 100 other episodes that you can go and listen to of the Financial Pro podcast. So make sure you go back and get some insights around building a more successful financial services business. Stephen, thanks very much indeed for your time, my friend. It's been a pleasure having you.
No worries. Thanks, Gary. Thanks for having me on. Cheers.